Great. Well, hello, everybody. Welcome to the UKWA Housing Association webinar. If you're listening to us live, then you're very welcome, and the same if you're playing this back later. So at the UKWA Housing Association, we published a 2022 report into solar power. And what we were able to show was that in the UK, we could double the solar renewable energy by installing more solar panels on warehouse rooftops. At the moment, only about 5% of warehouses have solar on the roof. But one of the main features of this type of renewable energy is that a lot of the costs, a vast majority of the cost is upfront. Is that a blessing or is it a curse? Well, you could argue either way, but we're very lucky today to have Richard Fisher from Zestec, who's going to explain to us the principle of power purchase agreements, which is a way to deal with the upfront cost of solar panels and should help to unlock this doubling of solar power that we're keen to promote. So welcome to the webinar. Please do use the chat to introduce yourself. If you've got some questions you'd like to pose to Richard, then you can post your questions anytime using the Q&A function. And without further ado, I'll hand over to you, Richard, to take us through it. Thank you.
Thanks very much, Claire. Just hoping everyone can hear me all right and see the slides okay. So welcome to this morning. And look, the premise of this webinar really is an informative one to just give some background information to help people understand some of the options that are out there in regard of benefiting from renewable energy, specifically in this case, PV and solar. That will roll forward at times, and over time that'll touch other assets that could be batteries or it could be EV charging. But this morning, based on what Claire is saying, we're around solar. Look, this is your espresso session. Hopefully you've all got a cup of coffee in your hand. It's pretty relaxed. It's more about you than it is about us. If there are any questions, please feel free to put them in the questions or the chat, and we'll get round to them. First thing to say is, what is a power purchase agreement? And essentially, it's an investment proposition that benefits you, the client. And the reason it benefits you is that it's aligned to how investors want to deploy their capital in regard to getting a return for renewable energy. And that allows you to make a saving on that element of your electricity bill that is covered by the solar. So what does that really mean? When you're driving up and down the motorway, and sorry if everybody is aware of this, you'll often see solar panels on top of rooftops, large warehouses, cold storage, whatever it may be. And very often they are not owned by the business themselves. They're owned by an investor, and they are funded by the investor, put onto the roof of that building, and the electricity that is generated from them is acquired by the occupier of the building. And the occupier of the building may be a leaseholder, it may be the owner of the building themselves. And really what that means is that because there's no transmission charges, because that power is generated from the solar on the roof, it tends to come into the marketplace in normal times, and we're not in normal times, 20 to 30% less than you would pay by the grid. Right now, as I'm sure many of you are experiencing, that paradigm has shifted enormously. And yesterday, for the first time, actually, we heard somebody's electricity costs were predicted to be £1 more than they were paying per unit in the next rise that they're going to see from their provider. So right now, whatever you do, and I think to Claire's point, PPA is one route, and we'll go into that in a little bit more detail. Whatever the route, looking at this now as a way to start the energy transition journey, to make savings on power costs and to become more self-sufficient, but also to benefit from an asset that you have sitting there, which is your roof, or potentially it could be adjacent land. It's a really good time to be looking at it. The other piece that we'll come on to a little bit more detail is if you buy that yourself, then you're responsible for the maintenance and upkeep of it. If it's owned by the investor, it's their responsibility to keep it running. And that becomes true when we look at the idea of alignment. And this is quite important. I'm going to a big conversation with with somebody yesterday around this and just talking it through, is that this isn't a piece of fit and forget equipment. You know, people talk about it being like that, but in reality, there are moving parts, there's modules, there's all sorts of things that go into this, inverters, and therefore you want to ensure that it's running as efficiently as it can be. If it's funded by the investor, for them to get their return, it has to be maximizing the generation over time and effectively delivering what they expect. If it's delivering what they expect, then it's definitely delivering for you, the client, and you're generating the electricity and therefore getting the savings that were predicted as part of the initial model that was built for you. So that's a critical thing to keep in mind, is this is very different to other ways of acquiring a system, which I'll come on to now. If there's any questions as we go, please do ask or put it in the chat, or if I haven't explained anything well enough or not articulated it well enough, please shout. So here are some considerations for you, the client. This isn't just about buying a piece of electricity, but it's potentially a bit of the infrastructure environment in your business. And how you do this is really down to your business drivers and what you do as an organization. So it could be down to, do you have capital sitting on your balance sheet that you want to deploy? And if you do, is that something that you would want to deploy into a renewable energy project or into your core business? And traditionally, you might have done that deployment of capital yourself, but in a volatile market like we're seeing at the moment, we're seeing other organizations coming back and saying, well, look, you know, we would have done this ourselves, but actually right now for us as a business, it makes more sense to hold on to that capital for the core business and to deploy your capital into this investment proposition. You know, what are the sustainability needs that you're looking at? You know, how are you taking that out to marketplace? What is demanded in your supply chains? And that's a critical element now. We're seeing more and more of that. And actually, you know, whatever anybody says, there's plenty of drone footage out there on rooftops with solar on them, but it's still a great PR opportunity. So whichever way you do it, it's a good PR opportunity. And that leads into your funding approach. So do you self-fund it? Could you use asset finance or the PPA route? And there are benefits in all of those. The only mechanism by which you save money straight away is the PPA route, because you're immediately getting savings and you've deployed no capital. And as we know, self-funding and asset financing depends on how you use that capital, IRR and length of return, which at the moment, to be honest, can be reasonably short. But I go back to the previous point about deploying your own capital. And this is a system that is a long-term asset. This is something that's going to be on your roof for 25 years, potentially, potentially more. And therefore, these other ideas of how it gets maintained, confidence in it being put up there, become quite interesting. We'll touch on those a little bit more further in the presentation, but this is an industry that has had peaks and troughs in terms of quality. We have acquired assets from other organizations on behalf of our investor, and we're part of the Octopus group of businesses. We're owned by one of the funds managed by Octopus Energy Generation, so we've got quite a large portfolio of these kind of assets. And it's fair to say that the build quality is variable, and that is quite an important consideration in terms of the route that you go. So one of the things that we've learned that over time we kind of insist on is that we have authorized installers that have to deliver to the quality expected by the fund, so the system performs for you, and if it performs for you, as I said earlier, it performs for the investor. And that includes all of the asset management, all the operations and maintenance. If a panel goes down, it gets fixed. If an inverter fails, then it gets replaced. It has a cleaning schedule in it so that the modules are kept clean. So we are monitoring that system all the time. And that's one thing to think about if you decide to go the capital payment route. All of those things become really important. So what happens if there is a challenge with one of the parts? What happens if an inverter goes down? Who is going to clean it? You know, paying the business rates. All those sorts of things are considerations. So one of the things around the PPA is we think of it as some of you will remember, or some of you may not have seen it, a guy called Geoffrey Moore, who wrote a book called Crossing the Chasm, and it was really about how technology proliferates into businesses. And what he talked about was a core product that is augmented by everything. So this whole product approach is really what we try to bring with the PPA, is that it sits on the roof. You don't need to worry about it. It does what it said it would do without any input or thought from yourselves. And again, that depends on your business models, on your business drivers, and what's important to you. The other part of this that becomes important is this is normally only a part of the journey, start of the journey. So then we're looking towards what might the rest of your sustainability journey look like. And I think one of the things that we found is if you're working with a key partner around that, those conversations become easier as batteries become more mainstream, EV charging, could even be things as simple as LED lighting, that becomes important. So it's just thinking about that whole product piece. But right now, what we're seeing out in the marketplace is a strong demand for solar, which is great. And I think, as Claire said, there's plenty more to go. There's something like 250,000 hectares of rooftops in the UK that could be covered with solar, which would be promising. We're seeing more interest on the uptick on the PPA model for the reasons that I've talked about earlier in regard of speed, the reticence at the moment to deploy people's own capital, and this idea of this whole product concept. And I'm just looking, there's no questions in so far. I haven't missed anything. Lucy, prompt me if I do. So how does it really work? So taking Zestec out of it for a second, but generally in the premise of how these conversations happen, we would get approached by somebody who's got an interest in putting solar on their roofs, may not want to fund it themselves, or perhaps haven't made that decision yet. We do a desktop survey, we'd assess the site, we then take your half-hourly data, look at your electricity usage and the demand profile. How we work this out is very linked to that demand profile. So when do you use electricity? How do you use it? What are your peaks and troughs? And therefore, when is the most likely time that you're able to benefit from that generation? And actually, if would a battery be appropriate? Often it's not, but it could be appropriate. Are you a 24/7 site? Are there peak demands during the day? All of those things we look at. And then we simply look at what your bill is, your half-hourly data on your bill is, and we say, right, okay, based on what we think we can fit on the roof and what we think that can generate, what are the likely savings that you're going to make based on your usage profile? And we try to make that pretty accurate so you get a good feel. Number of things change that, to be completely frank, is once we've done a site survey, it might change it just because of access or other things. Over time, we're hoping that module prices will start to stabilize a little bit. Then they've been more expensive, and that drives one of the mechanisms that drives the PPA rate, as it does for any capital project as well. So hopefully that might drop, so we might be able to share that with you. And then what we tend to do is just walk people through a proposal. We put it all together and we walk them through it pretty much slide by slide and explain exactly what's going to happen. And I'll come on and talk about why that's important. Essentially, then we enter into a lease to take the roof space above your roof. And that can be anywhere from a 10 to a 30-year period. And there are benefits to shorter periods, and there are benefits to the longer period based on how you look at that deployment and what you think that might do for you. So a shorter term will generally mean a higher PPA, but that's the tariff, the price you pay for the electricity. The PPA rate is the price you pay for the electricity. Think about that as your electricity bill from the solar element of your electric. That tends to be higher on a shorter PPA, because it's shorter time frame for the investor. But if you believe that electricity prices are going to stay a little bit higher, and the belief is that over the next couple of years they'll be reasonably high, but they will start to tail off and reduce, but probably not go back to the level that they were, one of the things that can happen at the end of the period, the end of the agreement, is that you inherit the system. We can extend the PPA if you want to, but there's a number of ways of looking at it, but you can inherit the system. And if you do that, you could say, well, look, I'm prepared to hedge a little bit on that 10 or 12 or 15-year period rather than 30-year period. I'm still going to make savings on that element of my electricity, but then effectively I end up with a system. So there's a number of ways that we can help you use the mechanisms for the PPA agreement and lease. We then come and install it. Just from a Zestec perspective for a second, we only use authorized installers. They have to go through a very stringent pre-qualification process with us and with our funder to ensure that it is to the right quality and that it's going to do what it says on the tin, because again, they are very stringent on how we do that. You then have the fully funded solar sitting on your roof for that period, that as a whole product is looked after, managed, maintained, and ensured that it delivers what you expect it to deliver. And then, as I said earlier, potentially that idea of gifting the system over the period of time. I haven't seen any questions come in, so I'm just keeping my eye on it. I've not looked at the comments. If there's anything in comments at the moment or the chat, but I'll move on. If there's any questions, please drop them into the question and answer, and I will address them. So essentially, this gives you an idea of the structure. You have an agreement with effectively our fund, which is one of the funds managed by Octopus. That business then charges you for the electricity that you use from the system. And generally what we do, rather than insisting you take all of the electricity from the system, is we will generally do it on a metered supply. I'll talk about that in a little bit more detail in a minute, but essentially the agreement is that you use that electricity first, and then for anything else outside of that, you swap to the grid, and then you get a bill from the organization. We then look after all of that development, asset management. We ensure from a project point of view that it meets all the criteria that it should do for you, and it's deployed to the quality that it should be. And the small things make a difference. I mean, we've picked up a number of assets from other organizations. There's some great people out there doing a fantastic job, by the way. But for instance, if somebody installs it on your rooftop and it's not installed to the manufacturer's specifications, and this could be as simple as the panels being too close together, it could be a millimeter, then it invalidates the warranty. So it's simple, small things where people that have got used to just doing this don't always check those things, but that would invalidate the warranty. And whether you do this yourselves or you do it via us, those things are worth bearing in mind. So you sign a lease agreement for the roof space, and then the space above your roof, sorry, and then the PPA agreement is essentially the agreement to buy the electricity that's generated from that installation. If there's a landlord involved, because you are a leaseholder, then we'll need some kind of signature on an occupational lease from the landlord, and then the power purchase agreement and the subleases with you, the client. And we do this a lot, so it's not complicated, and generally speaking, the documents are pretty cookie cutter, and they've been designed to be balanced either way. So look, I'm conscious of time, and I wanted to spend a little bit of time on this, and this is pretty key to making these decisions. So look, some major organizations are using this approach, PPA approach. Major retailers are using it, major online retailers are using it. We've got big manufacturing company that we're just working with. We've got a telecoms company that we're working with. So big organizations are doing this, and it's very common, but so are owner managed businesses as well. So we're dealing with systems anywhere from 100 kilowatt peak up to 22 megawatts and everything in between. So it's not the domain of large businesses. It's not the domain of small business. It literally is, given anything over sort of 100 and 150 kilowatt size system, this could fit the model for you. Keeping in mind, depending on your business, then the level of savings you make across your whole electricity bill might still not be huge, but they'll definitely be worth having. But it's also the story that you can tell to your supply chain. So this is where we think is key, sort of key considerations for people and what they want to think about when they're looking at who they're going to work with on a PPA. First thing is, this is a long-term agreement, and Claire knows this, we talk about it a lot. Partnership is key here. This is somebody with whom you have an agreement that has an asset sitting above your building for a long period of time. And if you think about that in terms of it generating electricity, that's one thing. If you think about it actually effectively pretty much being your new roof, that's another thing, or part of your roof. So working with somebody that you trust is important. And one of the things that happens, because these are assets, and I didn't realize this until we sort of really got into starting the business, is that these assets are tradable. So you don't own that asset above your roof, it's owned by the investor. And some of these assets are bought and sold on a regular basis, and they may choose to sell their portfolio of assets, of which, so we're going to answer one of the questions in a second, so of which you might be a part if they sell that portfolio. And there's nothing really that you can do about that. So one of the things that we talk about is being a long-term hold, i.e. that we're going to be the partner for the period of the PPA agreement. We're in for the long term, and we'll hold those. We're looking at this as a yield play, not a turnaround. Who is the counterparty? So who's the counterparty that you're signing up to? Very often what we find is people represent this opportunity via the installers. The installers go out, and if you can't afford a capex, they'll then push a PPA, and in fact they should present both to you, but let's not worry about that. You also actually want to do a PPA, then they'll go and shop that around funders to try and get the best rate that they can get out of it to deploy it on your roof. And actually that doesn't really work well for you, because A, it's a race to the bottom, B, you might not end up with the right funder, counterparty. And there's some good other funders out there, by the way, and we work with some of them. We bought assets from them and sold assets to them from a previous business, so they're good. We don't sell any assets now, so we don't have that. But the counterparty credibility, are they a solid counterparty? Do you trust them? The proven partnerships around a firm installation, we only use authorized partners. That's key to you. System optimization approach. So if you look at that, you can tweak some of the variables to say, right, actually, we can size the system for slightly more consumption that you're going to use, but because of the period of the PPA and what we think we can move to export and the pattern of your usage, all those things say that we should make it slightly bigger, because it means we can give you bigger savings over time, rather than trying to fit it to 100% of what you'll use at any given point in time, because actually you might be able to use more than that on a high demand day. So we optimize that for your savings. We have to have the yield forecast accurately. If you overestimate the yield forecast, then you can make the PPA rate come down, and that looks great, but actually it's not what you're going to end up saving. So you have to be really careful about that. What's your consumption? What are the PPA terms? What are the inflation assumptions? We generally use RPI for the price of electricity you buy from us and put it into the model to show your savings. We use 4.2%, which is a low rate for showing what normal grid tariffs will be going up at. As you know, those have way exceeded that exponentially in the last couple of years, and we don't think it'll ever come back down, but at least it doesn't overinflate the potential savings you can make. And we can play with that with you when we look at models. Really important things, DNO constraints, can you actually get any export, and what does that look like? And we start that conversation early. A authorized equipment selection that we know isn't using anything like child labor or anything of that nature, or enforced labor. And this idea of active performance management. So this idea of being fully insured and having peace of mind. And I just want to answer the question. So it's coming, I work for a company who has very strict H&S requirements. We currently don't have managed safety in place across all the roof. We install these as part of the installing so far. We're not allowing people to go onto the roof without having these in place. So one of the things that we can look at, and it's a really good question, if there are safety requirements required to access your roof, or you have policies that need those to be in place, depending on the size of the roof and depending on how that manifests itself, things like minor roof repairs or even major roof repairs, we can include into the PPA price. So if we had to do those, we could build them into the PPA price, which probably shouldn't affect it a lot depending on the size of the building. So we could meet those H&S requirements from you. Hopefully that answers the question that just came in there. So there's lots of flexibility in how we do this. I'm just conscious that's 11:25, and this is half an hour and a cup of coffee conversation. These considerations are critical, because you never want to have something that ends up on your roof that you weren't fully aware of all the implications of. And we believe that that's the way it should work, so everybody gets a fair view of it. Things like, as I said, roof repairs, we can include We're starting to look at where we optimize batteries. Batteries are pretty tricky for people, and actually a lot of people don't need them right now, but that is going to change as the demands on grids change. And the other part that is this full idea of active monitoring and performance, and having this idea of this complete peace of mind is critical. So key messages: we fund it, we own it, we manage it, we maintain it. You benefit from the electricity that it generates and a significant reduction in the bills that you're paying for that portion of electricity generated by the solar. It's a long-term agreement, generally starting from 10 years, but up to 25. There are ways to use that intelligently to best meet your business drivers. This is the mechanism by which you save money straight away. And as I say, we look after that system, monitor it for you, give you the performance of it, and then bill you for that electricity with hopefully complete peace of mind over the period. That's right. How PPA.
Sounds really good, Richard. I just wanted to sort of interject and thank you for giving such a great explanation. I know we haven't had many questions come in, but I do think our audience might be interested in dealing with landlords. So within the warehousing sector, you've got quite a lot of operators who might have a bit of a mixed portfolio. Perhaps they've got a couple of buildings that they own and a couple that they lease, and that might feel like it's going to make things very complicated. And I wonder if you could just say a bit more about how PPAs could work in that sort of scenario.
If I hopefully you can still see the slides. If I take it back to here, if you own the building, the structure looks like this. If you're in with a landlord, then we'll have to have the permission of the landlord. What's changed markedly, Claire, over the last few years is that most landlords are now seeing the benefit of having these sitting on their rooftops, and they're keen to work with us as long as the agreements are right. And as I say, ours are pretty boilerplate and have been built with that in mind. So we work with you to have the conversation with the landlord, and as long as the lease is generally 10 years or above, it doesn't represent a challenge to us. And that is a big change. Landlords are now recognizing that a lot of people that are coming in for tenancy or are in a tenancy are expecting a renewable transition journey from their landlord as well as themselves.
Yeah, I think that's something that we're observing as well in the marketplace, is that there are more stringent regulations affecting the way that you can lease out buildings, and so landlords don't want to be left with stranded assets that don't meet those standards, and solar panels can be a really sensible way forward for them. But of course, not all landlords would want to fund it themselves, and using a PPA might be a good option that they want to take into account for the benefit of the landlord and, as you say, the occupant of the building, the client.
Yeah, and we're having conversations now with big landlords, big people building big sheds that are saying, look, can you fund this for us on this building, because it will make it more attractive. And of course, having an occupier makes that a lot easier, but we're looking at models across their portfolio that says, look, we can retrofit somewhere you've definitely got tenants, and when tenants come in, we can look at this for you. So we're seeing a real demand and move from that landlord community to understand this better and how it can benefit their tenants. And there are some big organizations that actually run their own PPA. Segro is a good example of an organization that puts its own solar on its own roofs and runs a PPA for themselves, sadly, because we'd love to fund it, but there you go.
Great. Okay, well, if there are any further questions you will have seen in the chat, do email our events team and we can share those directly with you, Richard. But we promised that we would keep this to a short session, and the half hour is up. So it just remains for me to say a huge thank you to you, Richard, for explaining everything. And thank you to everybody who's dialed in. So yes, a great explanation, and I hope more people will take account and bear this option in mind when they're putting solar panels on their rooftops.
Yeah, and thank you everybody for coming along. Thanks, Claire.